Good morning. It's May the 27th, 2016, the last trading day before a 3-day holiday. 3-day holidays usually take the E-mini higher. So we can expect sideways to higher for the E-mini. 3-day holidays can take the treasuries either way. But my guess is, given this week's auctions, that we will close no lower than 129.18.5. Tends to yield a trading range on treasuries. We'll play for that. Today's news: GDP first revision going from plus 0.5% to plus 0.9. I think that's probably built in. Deflator the same at 0.7. Corporate profits minus 3.6%. Not the stuff of bull markets, but we've never had a stock cycle like we have now, where the central banks, central governments, depending on the country and the rest of it, are outright buyers of stocks. They are going to support the markets. Their bosses have told them to do that. They are political animals. They have to survive. Those that lead central banks can lose their job if the administration doesn't like what they're doing. And so they almost always succumb to political pressure. Don't know what Baker Hughes rig count it will be. Last week for North America it was 448. And then Yellen. And Yellen's probably the biggest factor today at 13.15. The market is saying no rate increase in June, but it's now at 50% for the rate increase in July. Again, the only reason I would see the Fed would raise interest rates is to save face, to show people that they're still relevant. Ray Dalio last fall in October came out and said the Fed can't raise interest rates in a meaningful way, and he gave them a 50 basis point pad, and if they raise it in July or September or December of this year, that's that 50 basis point pad. And the real reason for that is that financing the debt. We have adopted the Japanese track. Very, very low interest rates, continuous spending more money than you bring in revenue-wise. Japan's debt to GDP ratio is about 400% now, 4 times. And it can go on for a very long time. But if you were to go to a historical interest rate for a portfolio, 7-year duration, which has historically been about what it is, at 5%, you'd take the debt service up to about $900 billion from its present 270, 280. So that's why the Fed really can't raise interest rates. They would add another $1 trillion of debt to the structure, meaning as opposed to raising $1 trillion of new money each year, they'd be raising $2 trillion of money each year. Just can't go on. But nobody wants to rock the boat. So boil it all down today. I think we have a trading range. I think we'll find sellers at 130. And we'll probably find buyers at 20 to 24. I think the market will close above 29.18.5. So first sell is 29 to 01. 3 to 7, sell 2. On the buy side, 21.25. Like to get it done closer to 20. Naturally, cheap Charlie. 13 to 17 for buy 2. And a lot of it gets down to how strong is the rally in the E-mini. I don't know what everybody else has planned for this weekend, but we have wet feet here in Wichita, so probably the heaviest gardening I can do is laying down mulch to cover up the weeds that will start to explode. Okay, looking at the 30-year, we've got a P. We've got volume at 09. We're at 15. So 8 to 12. Going to be the first little band of support. Buy 1, 1 to 5. Buy 2, 25 to 29. On the sell side, resistance is 19, 20, so 20 to 24 will be 1. 27, 31, sell 1. 3 to 7, sell 2. Gold was unchanged when I got up this morning, where we went out yesterday. There was a close. 10 to 15 is probably where support is right now, and 25 to 30 would be resistance. We have a P in a down market. That's short covering, so perhaps we've rejected prices below 15. So 17 to 15 buy 1. 10 to 12 buy 2. On the sell side, 22, 25, sell 1. 28 to 30, sell 2. Looking at the euro, well, we have a seller at 112, and maybe we have a buyer down at 50. If Yellen's speech is hawkish, raising interest rates, the euro should trade lower. So 111.50 buy 1, 111.25 buy 2. On the sell side, going to be a stretch to get up to 12, so 90 to 112 even, sell 1. And 15 to 25, sell 2. Looking at crude, usually when you make a new high of 45, a 50, a 40, we get some consolidation. I think the break in the market's still down at 47, 47.50. We saw $50 coming a couple of weeks ago. We got it. We're still under profit taking, and if you take a look at crude, right here we got one break in the 48.75 area. Next level you'd look at it would be 47.50. Then we've got this breakout basically from 47. So 47, 47.50, 48.50, 48.75 is where support could be. And we'll put this together and break it out like that. Definitely have a B, so testing support a little bit lower. Might be aggressive, but that's where support is. So 48.50, 48.75 by 1. By 2, 48.48 and a quarter. Okay, we have the OPEC meeting in June. If they're really trying hard to get an agreement's going to be tough to get. They run prices down a great deal in front of those in that meeting. But right now it doesn't look like there's a deal to be had or to be gotten. So my guess is that OPEC's June meeting isn't going to add any buying strength. Sell 1, 49 and a quarter, 49.50. Sell 2, 49.75.50. Even, but we'll have to get Nancy to come out and shine up her crystal ball and tell us where the market's going next. E-mini pointed higher. 3-day holiday weekend. Generally trades higher into those. It's not guaranteed, but the tendency is there on every 3-day weekend, 3-day holiday. And I think a lot of that used to come from the major firms didn't want a rash of phone calls on Tuesday morning about what the hell happened to the stock market. They don't want to give people 3 days to think about what they should do with their portfolio. And you know what you should do with your portfolio. You buy and hold. You don't dump your stocks. Let the big boys get long and short, but we need to have a ready buyer. So I think that's really kind of where it started. And the Fed and everybody else does not want a lower market, so no reason to expect us to break today. If we get to this 93 level, and I think we are, really the next stop's 2100. So we'll put 96, 94 for sell 1, but I think the action's at 99 to 04, sell 2. On the buy side, I'd like to do it 85, 87, but you see where we are right there. So 85, 88, buy 1. And this market has made us pay up. It may take a 90 to get in, then 80, 82 for buy 2. Have to see how it acts at 93, 95. Quick review of the news. GDP plus 0.9. Deflator plus 0.7. Stagflation is what it's called. Corporate profits minus 3.6. I'll get the bears all excited again. Market can't go higher on this kind of news. Consumer sentiment 95.5 could come in higher than forecast because of the stock market. Baker Hughes rig count, don't know. Last week 448. That includes Canada. Not too long ago it was 1,800 plus. A lot of people out of work. And then probably the biggest factor is Yellen at 115 today. And I think she's going to say what she always does. We'll raise rates. We're spring-loaded to raise rates when the data warrants. It'll be a data-driven decision. When the data says we can raise rates, we will. And she'll reiterate what she says every time she picks up the mic. We'll get to see if that's true. Going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.